Welcome to our video series covering core concepts that are important to borrowers' loan protection from PCBB. In this session, we'll focus on understanding yield maintenance, a standard prepayment structure in swaps, included in every BLP deal. We'll explain what yield maintenance is and how it relates to BLP. Then we'll discuss how yield maintenance relates to market-driven swap rates and how it's calculated. If you need a refresher on swaps and swap rates, see the videos in this BLP portal. Let's start our discussion with the general explanation of yield maintenance. As a standard prepayment fee structure, yield maintenance can result in a fee that your borrower may either owe or receive. It comes into play if your borrower breaks, prepays, or amends the BLP loan, and if the swap rate for the remaining term, known as the prepayment swap rate, is different than the initial swap rate locked in at inception. This is an important structure to understand because in over half of all swap deals, borrowers want to prepay or alter the loan term. Yield maintenance is included in the BLP rate protection agreement, and borrowers are often reassured to know that this agreement is assignable and assumable, so your borrower can assign the agreement and the loan to another party. This can be useful if your borrower wants to pass the deal on to an heir in the event they pass away. Similarly, if your borrower decides to sell the property covered by the agreement, the loan can be assumed by the new owner. Now let's look at how the yield maintenance fee is calculated. We can use the example of a 15-year loan that's paid off after 5 years, leaving a remaining loan term of 10 years. First, you determine the present value of cash flows for the remaining loan term using the prepayment swap rate. The prepayment swap rate, in this example, is the market-determined 10-year swap rate at the time the borrower decides to make the prepayment, in this case, 5 years into the 15-year loan. Next, you subtract the value of those same cash flows for the same term using the initial swap rate. The result is the yield maintenance fee. This yield maintenance table helps your borrowers see the actual dollar figures for potential yield maintenance scenarios. It provides transparency when yield maintenance can be triggered, and it shows whether fees are paid to PCBB or received by the borrower. You can generate a custom yield maintenance table by creating a borrower presentation in this BLP portal. Now we'll look at 3 different scenarios where yield maintenance is triggered. We'll assume a $2 million hedged loan with a 15-year swap rate at inception of 2.4% and a borrower who decides to prepay or amend the loan with 10 years remaining on the term. In the first scenario, the prepayment swap rate for the 10 years remaining is 2.65%, 25 basis points higher than the initial swap rate. Since the prepayment swap rate is higher than the initial swap rate, the borrower will receive a prepayment fee from PCBB. Looking at the table, find the remaining term column and look down to find the 10 years row. Then look across to the plus 25 BP column. You'll see that the borrower would receive $27,721 from PCBB. In the second scenario, the prepayment swap rate for the 10 years remaining is 2.15%. 25 basis points lower than the initial swap rate. Since the prepayment swap rate is lower than the initial swap rate, the borrower will owe a prepayment fee to PCBB. Referencing the table, again, find the 10 years row, then look across to the minus 25 BP column. You'll see that the borrower would owe PCBB $28,309. It's worth noting that if your borrower were to refinance in either of these 2 scenarios, the yield maintenance prepayment fee could be offset. In other words, the economics of the prepayment and refinance could be a wash. In the third scenario, there is no change in rates with 10 years remaining. Since the prepayment swap rate equals the initial swap rate, there is no yield maintenance fee to pay or receive. When a yield maintenance prepayment fee is due, the amount will decrease as the remaining term decreases. You can see this change if you look down the columns of the table. The fee decreases because as the cash value of the asset related to the BLP loan decreases, And as your borrower pays down the loan, the basis point value of the structure also decreases, assuming there is no change in the rates, and so does the impact of any difference between the initial swap rate and the prepayment swap rate. Sometimes a borrower may opt to partially prepay the loan. In that case, any yield maintenance fee would be prorated based on the amount being prepaid. Note that a partial prepayment must equal at least $100,000. This concludes our review of yield maintenance. In this session, you learned what yield maintenance is, how it's triggered in a BLP deal, and how it's calculated based on changes between the initial swap rate at inception and the prepayment swap rate. You also learned that your borrower may receive or owe a fee and how you can use a table in the borrower's presentation found in this BLP portal to help them understand those fees. If you have a borrower who hesitates to move forward with a BLP deal because of worries regarding yield maintenance, we can work with you and your borrower to offer alternatives. Please contact your BLP team for assistance. To learn more about BLP, look for additional videos as well as helpful checklists and sample BLP documents right here in the BLP portal. If you have questions, please let us know. We're here to help, and our goal is the same as yours: a satisfied customer.